Welcome back to the Property Frontline. We're covering off our Market Watch series, and I'm here today again with Scott Hochgesang. Hi, Scott.
Hello, everyone.
And what we're doing today is covering off the Australian property market performance for the data ending October 2024. We've also got our trend topic of putting property in super, which we'll cover off after we discuss the data. So let's get started. Right, so as I mentioned, we'll be covering off the data for the end of October 2024. Now, normally we run through the tables from each of the key data houses that we consider to be the best sources. So we normally cover off CoreLogic, and then we normally review the data from SQM Research and also PropTrack. But what we've done as an innovation is we are going to show the combined table. And so I'll just quickly run through the performance for data to the end of October 2024. So for Sydney, CoreLogic is saying market is down by 0.1%. SQM, who use asking prices to determine their differences, they're saying that asking prices are up 1.4, and PropTrack is saying that the sales prices are up 0.2. Melbourne, I'll do this a bit quicker now. So Melbourne down 0.2, SQM asking prices are up 0.4. It's almost like the vendors are putting their properties on the market with an increased price, and yet the selling prices are a little bit low. Anyway, go on.
I'd say that could be. Just one note, these are house data points, just so everybody sort of gets front. We're looking at house prices in the different markets.
Yeah, not dwelling. So it's not a combined. Very good point. Brisbane up 0.7, 0.2 and 0.2. Adelaide up 1 point. SQM has asking prices down by 0.9. PropTrack up 0.5. Perth up right across the board. Hobart in the positive. Darwin slightly back. SQM has them going up by 2.6. Canberra slightly down. SQM has asking prices up. And so Canberra is actually up by 0.5. And nationally, CoreLogic doesn't provide that data, but SQM has asking prices up by 0.9 and PropTrack has sales up by 0.3. So, Scott, can you talk us through this slide?
Sure. Look, this is a new one we're showing for the first time. It's from PropTrack. It shows annual price growth in each market, and then also shows the change in that price trend over time. So it's just sort of starting from the top. This is growth over the last 12 months. The Perth market has been growing at 20.6%. What's interesting, though, is we can look at that curve and see that the annual growth rate has been higher several months ago, has peaked, and now is falling quite sharply. Just to be clear, it doesn't mean the market is falling. It is the rate of growth that is falling. But I think this gives us sort of some very early indications of where we are headed in some of these different markets. Moving down the line, we have Adelaide second, which is that green line. Annual growth rate of 14.9%. Was kind of quite flattish there in terms of rate of growth, and now slightly falling. So just a little bit of weakness there. Perth annual growth rate at 12.5%. Seeing a dip there. So obviously growth rates are slowing in that market as well.
So Perth is up here.
Green's Adelaide, so that was second, and then orange is Brisbane, which is third. So those were our three BAT markets, and then sort of working down our line, we've got Sydney annual growth rate of 5%. starting to tail off a little bit. So I think we're starting to see some of that weakness in the monthly growth rates, starting to pull that annual growth rate down. And then our last three markets are all really pretty close to zero. Hobart, Canberra, and Melbourne's actually in there. And I think what's interesting about the Melbourne stat is even though the annual growth rate's at minus 1.5%, that curve is starting to flatten out, and it's going to flatten out before it starts heading up. So there is just a slight amount of evidence that we're starting to see something there in Melbourne. We'll see what the data looks like in the coming months.
So, Scott, in summary, then, how are total listings going?
Well, we've got some data here from CoreLogic we've pulled. And one thing I like to do is a lot of the data sources look at total listings or stock on market and they compare it to the previous month, or even from 12 months ago. And there's seasonality in that data. And also, we don't know what's happened last year versus this year. What we're looking at is some data that compares listings now to an average over the last 5 years. So, in our opinion, that gives us kind of a bit of a better indication as to markets that may have more supply hitting the market. And what we're seeing is a lot of listings hitting the market in Sydney and Melbourne. We've got total listings 13.2% above their 5-year average in Sydney and 13% higher in Melbourne. So more listings hitting the market versus the averages. Looking at Brisbane, Adelaide, and Perth, we still got the opposite, which are not a lot of listings on the market. And each of those markets has 20% less listings or even less than that versus the 5-year averages. So it really shows us still there's kind of that two-tiered market out there with people putting their properties on the market, wanting to sell, and others, I think, sort of still hanging on, for more growth.
Yeah. And I would still say that the increase in listings, particularly at this time of the year, is because there's been some changes to that taxation legislation. There's some properties that we've picked up recently because some foreign investors realised that they had a very big tax bill that they needed to avoid, and so they just put their property on the market, to flatten out their portfolio. So,
Interesting.
yeah, interesting.
Yes.
So moving on now to our trend watch. Now, the reason why we're covering off this particular topic of putting property into super is because I've really noticed more and more of my clients and inquiries are coming from people who really want to put property into super. It's good if some people have already got their structures set up, but I'm actually seeing more and more people just come to me saying, I want to put property into super. What kind of property should I be looking for? So we're going to have another session later on in the month with some key professionals that will talk about the technical side of putting property into super. But for the moment, we know that the reasons why people are starting to make more inquiries about putting property into super, largely it's because of the volatility and the high management costs of their existing super, or volatility of shares, causing more people to want to actually take action. We would always caution people the things that we're going to talk about here today are pieces of information, but before you do anything, you must always seek personal advice about your personal situation from a licensed professional. So that's just like a little warning out there. But from a benefit of putting property into super, most people are saying that they want more control over their funds. The other thing is that property as an asset has like that triple whammy of capital growth, really good rental returns, and in many cases, the potential to add value. We know that you can't, do developments in your super and all that sort of thing, which we'll cover. But also, currently, there's no capital gains tax if you're selling after retirement age. But once again, there are more complexities that you need to check before you do anything. And then on the con side, the cost and time to establish the structures can be a bit of a drag on the outcome. But so to cover off the statistical side or the quantum of what's happening in the market, can you talk us through this slide, Scott?
Okay, so what we've done is pulled some stats on self-managed super funds, just to kind of give you sort of an idea of the size of this market, and at the moment there are over 616,000 of these self-managed super funds out there in the space. These are stats as of March 2024. And over 1.1 million members of those self-managed super funds. They hold assets of $932 billion. It's just an incredible amount of wealth that Australians have built in these vehicles where they're controlling their decisions. And just to give you kind of a relative idea there, I guess the total residential property market in Australia is about $11 trillion now. And this would put self-managed super funds heading sort of toward 1 trillion, quite a large segment. And today people are investing in listed shares, cash and term deposits are listed there. Most people are 45 years or older, 87% of the members. And there are many other stats we could kind of pull on this, to share with you if you're interested.
So a point to make here is that most Australians will have funds going into a super fund, but if you want to put property into super, you actually have to set up your own self-managed super fund. That's why we've got that term there of SMSF. Good. Oh, and now on to the fun part. So let's have a look at some property. If you want to have success with your property in super, you need to be very careful about the type of criteria you use. So what we really, really want is property that will deliver a very high rental return. You've got to buy it at a good price. You want to be buying into an area where there's going to be good capital growth. So no random places out in the middle of nowhere, please. And we also want to have property that doesn't require too much maintenance. Some of the examples of what we're doing for people who want to buy property in super are these ones. This first one here is a 4-bedroom, 2-bathroom home that had really high rental return. The other thing, because we buy established property, so we don't buy off the plan or anything like that, any house and land packages. So the other thing we do for people who want property in super is to buy some established duplexes. The other thing we do is buy commercial property, particularly for small businesses or any businesses really who want to put property in super, and sometimes they will rent back property, but once again you need your tax agent to provide advice on that. And so it really can be any type of property, but it has to have those key criteria. And so, Scott, what are the types of property you would consider for super?
So given that we focus on the new property space, what we're going to be looking at as well are properties with multiple income streams attached. We'd like to find something that a builder can build for a client that has a rental yield over 6%. 7% would be even better. We're looking at just kind of a couple of examples here of dual key, dual income houses. These are rented by 2 tenants. The one on the left is just interesting. I wanted to drop it in here. I don't know if anybody's ever seen one of these or not, but it has 7 bedrooms, 4 bedrooms on one side and 3 on the other. It's the largest dual key property we've sort of ever seen anyone build. So these can be built for clients on a single contract for their self-managed super fund. And if you flip through to the next page, there's 2 other examples. Deborah's already talked about duplex projects. Here's a new property version of a duplex project. They're really a lot less common, and there's some particularities about duplexes that make them not always the best fit for a self-managed super fund, at least in my world. The one on the right is our favorite segment of the rooming house up in Brisbane, and where we can find builders that are willing to build these, and can deliver you a 5 micro unit rooming house. You could potentially have a rental yield on that of between 7 and 8%. The challenge that we run into is that, unlike when you buy in your own name, where you can buy land and you can do a build and sort of do all of that and have a loan, in the self-managed super fund space, there's a lot of rules which govern the way that this needs to be done. One is you need to buy a property on a single contract. So that means we have to get the builder to buy the land and do the build for you and deliver that property to you as if it's almost an existing property, almost as if it's one that Deborah's just bought for you. So that's a bit of a challenge in itself. 2 is the builders often want larger deposits on these from people buying with their self-managed super funds. So you might have to put a large deposit in. And 3 is if it takes a long time to do the build, you want to make sure your finance is quite solid, because you will need to go back and complete sort of the finance piece of this when your property is done. So there are a few things. We're going to go back to someone's financial planner and talk about their particular situations and really try to make sure that property options that we're showing to clients are really suitable for them. But there's kind of a few examples in the new property space.
Okay, thanks, Scott.
Thank you, Deborah.
So, of course, go on.
And really to sort of do this, I mean, you're going to need probably a group of people to work with you, I'm guessing. Deborah, do you want to sort of give us a bit of a lead into where we're going here?
Yep. And of course, as we said at the start of this session, you need to get personal advice from a licensed professional, really ideally an independent professional. So don't just go to one house or one company that has the broker, the accountant, and the buyer's agent all in one. That's normally a recipe for disaster. Because you want independence. You want each of your advisors to be interrogating what you're buying, and they should be doing it in the best interests of you, not the service provider. But don't let me start rambling on about commissions. Anyway, so yes, what you really do need is a good SMSF specialist, typically an accountant, a good property lawyer, a specialist finance broker who can handle the complexities of dealing with an SMSF purchase, and of course a strategic buyer's agent. We will be covering off the practicalities of actually making all of this happen, but it needed more time, so we're going to do it in a separate session. So once again, thanks very much for visiting us on Market Watch today. If you would like to be notified of our next session, make sure you subscribe. What we will be covering off, as I mentioned, will be more the how-tos of putting property into super. But if you would like help with your next purchase, you can speak to Scott or myself, and our details will be listed in the description box below. Is there anything else that you would like to mention, Scott?
Only that I'm still recovering from the US election, but we won't get into that.
Well, yeah, but it's really made the market jump up.
Certainly it has. It's surprising, I think, for some of us. We'll see what ramifications it has on our Australian property market, and potentially queue that up for maybe a future podcast.
Yeah, maybe it's all those people with their Bitcoin cashing in and buying property.
Could be. Or fleeing Americans looking to move to Australia.
Coming to Australia, yeah. Okay.
Our
Alrighty.
borders are open, our friends.
Yeah. And we're here to help.
Yes.
Okay. All right. Thanks very
Everyone,
much.
goodbye.